Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And as you can see, I've left my lines on the chart from last week where I drew a series of fan lines, and I talked about the most extreme fan line here, which is fan line number 6. Possibly breaking. And if you're new to fan lines, understand that fan lines are nothing more than a measurement of the accelerated trend. So in other words, as the stock increases its angle in this upward direction, there's a greater likelihood that the stock will break that line and then start pulling back to the other fan lines in the sequence. So I said last week we have to watch out to see whether or not the market would break through that fan line, and that's exactly what happened. We opened up on Monday with a red candle. The following day, on Tuesday, we broke down below that trend line, and by Thursday we had already dropped to the next fan line in the sequence. So where does that leave us now? We have a big, strong red candle as it's broken down below fan line number 5. So again, applying this rule of fan lines, once a fan line is broken, it's most likely going to head back to the next fan line in the sequence. So I think we're going to see a drop in the price to test this fan line, which is fan line number 4, and then I think we'll possibly see a bounce back up to this fan line, which is now going to act as resistance. I'll show you towards the end of this video, I'll show you where to find the educational library where you can learn more about fan lines on our website. But that's the general rule. Once a fan line is broken, it will gravitate back to the next fan line in the sequence, where that fan line will most likely act as support. Now, this is actually a welcomed pullback in the market. For weeks prior to this report, I had been calling for a pullback and we weren't quite seeing it. The rally continued right up until the State of the Union address that was given by Donald Trump in the House, and then it was almost as if the investors were waiting for that to come out, and the very next day they started taking profits. So this could very well continue. It's going to cause some anxiety among investors who are long at the top. But I think with patience, if you monitor the technical analysis signals here on the candle charts, you should do just fine. So let's take a look at the spiders. Pretty much the same picture where I talked about this extreme acceleration in the trend. And I said if we broke down below that, we would most likely pull back. I drew this as a support level. I'm going to keep that in place because that is the most current role reversal support for the spiders here, right around 267. And so I think that the spiders will pull back just a little bit, just like that, and then possibly see a bounce in this general area. So next week could be some mixed signals as investors try to jockey for position and maybe even protect their accounts by selling out of some of those holdings. But overall, I think this is a normal pullback. It's something that we, again, like I said before, have been expecting, and there's nothing to panic over here. Now, if we look at the Qs, this too is following suit, where I drew 3 fan lines. Last week, if you remember, I drew these. I showed you exactly how to draw them. Fan line number 1, fan line number 2, fan line number 3 with the most extreme angle. And again, just like the diamonds and the Russell 2000, I said if we were to break through that, we'd most likely pull back. So with the Qs, I think we're going to see a test of that fan line and a possible bounce next week again. So that's the way the NASDAQ market is looking at this particular point. Now, Russell 2000, I did not draw fan lines, but what I did is, again, I said if there is a break, we'll most likely pull back to this support level, which is a role reversal support. We did exactly that. In fact, on last Friday, this is when I drew the line. I drew from that low to this low, And on Monday, we opened with a bearish engulfing pattern. Let me zoom in here so you can see how powerful this is. Bearish engulfing patterns are something that are followed quite widely by traders, and they're 80% accurate. In other words, 80% of the time, after you see a bearish engulfing pattern, we generally drop. And you can see, we see a bearish engulfing pattern here, we see another one here, we see another one here, which was from Monday. And what did we do? We dropped right to that support level. But now that support level is broken. We've broken down and broken out below that support level. So what I'm going to do at this particular point is draw a new support level for you so you can use that as a guide to, again, manage risk. This former high right back here, it's a high from that day back on December 13th. I'm starting my line from that former resistance. Once broken, turns to support. See that support level right there? And I'm going to draw that out. So there's a good chance that the Russell 2000 will again continue lower to test that support level and then possibly bounce off of that. So we'll have to wait and see what happens there. The most interesting indicator was the VIX. Take a look at this. We had an enormous rally in the VIX. We actually closed over that high right here. You see this? This was a resistance high, but we closed barely over that. And that long green candle tells us that volatility is really getting pumped into this market. To really appreciate this, I need to go to a weekly chart so you can see what my forecast is going to be for the VIX. I think we could go just a little bit higher to test maybe even the highs from back here right around 25. But what I want to point out to you on this weekly chart is this. Almost every single time where we've had a weekly green candle at this level where it's nice and long, we generally get a strong pullback in the VIX after these long candles. Here's one right there. You see another big long green candle right there followed by a pullback in the VIX. Here's another one followed by a pullback, another green candle followed by a pullback. Keeps going. Look, another green candle almost the same length as what we've seen this week with another pullback. I don't think we're going to see a major rally in the VIX, but I think we'll see another test to see if we can push higher before going lower. So my forecast over the longer term for the VIX is actually going to be a pullback. So what I'm going to do is draw my line in a downward angle here to possibly pull back to 13, which will be another roll reversal support level for the VIX right there. So keep an eye on that because that's the best leading indicator that we can get with regard to forecasting the general markets, particularly the S&P, because the S&P and the VIX are inversely related, and I think you'll get a lot of use out of that as a risk management tool. Now, if you'd like to learn more about the Market Guys, just go to marketguys.com, click on the video tab right there, and that will bring you to the library that I spoke about, teach about fan lines. And also, I'd like to remind you that on February 19th, if you scroll down a little bit, February 19th is when we're having our next open house Q&A session. I know this is a little bit early to announce this, but it's on the website. You click on that link, you could save your seat, reserve that, and then you could ask me questions, and I'll even analyze your stocks along the way as we open it up to the general public for that action-packed hour of rapid-fire stock analysis. So I want to thank you for joining us this week. Stay tuned, and we'll talk to you later. Bye-bye.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.